Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad ZULKAFLI and my trade number is 28060. So our group will explain about a company named WCT Holdings BERHAD. So a little bit overview of this company. They are founded in 1981 and their headquarters is in Malaysia. So their expertise in construction, engineering and also real estate development. So this company expanded from local construction and to also international projects. So for example of their engineering and construction project, first one in Formula 1 racing tracks, mass rapid transit system, which is MRT system, airports, dams and water supply projects, motorways and highways, rail infrastructure, marine building and ports, urban landmarks and also specialized building. Their expertise is in shopping mall, hospitals and also government administrative center. So basically WCT Group is a leading player in construction, engineering and also real estate with extensive experience in diverse and high profile projects both domestically and internationally. So their significant land bank and broad skill set ensure the sustained growth and development opportunities in Malaysia. Next, the Tun Razak Exchange, which is TRX project. So Tun Razak Exchange based in Kuala Lumpur, Malaysia, and the purpose of TRX is to be part of TRX and International Financial District, and the opening date of the Tun Razak Exchange is in November 29, 2023. So a little details about this project. So the client of the project is Land Lease Project Sdn Bhd and the contract value is 555 million. So the component of the buildings, they have 4 floors of modern shopping space, 3 levels of parking garage, open landscape integrated with retail space, and also they have visitor information center. So what is the significance and the impact of the Tun Razak Exchange? First, urban development. They enhance the Kuala Lumpur's infrastructure and urban facilities. Second one is economic contribution. They bolster Kuala Lumpur's reputation as a business and finance hub. And also it explain about the WCT Group's expertise, which is demonstrate capability in handling large complex projects.
Assalamualaikum and hi everyone. My name is Amirul ROSLEE with metric number 285596. Today I will explain about project fund of WCT Holding BERHAD with project Tun Razak Exchange, which is TRX. First, equity financing. The business may create cash flow without taking on debt, which helps them avoid paying interest and keep their balance sheet in better shape. Second, retained earnings. Profit they are invested back into the company instead of being paid out as dividend. Third is debt financing. Obtain loans from bank or other financial organization which offer the required money upfront but demand repayment with interest over time. Next is bond. Attracting buyers who buy this financial instrument in return for consistent interest payment and the principal amount returned upon maturity. Next is government financial support. Malaysian government probably provide financial support or incentive. And lastly, joint ventures and partnership. Cooperate with other businesses or financial organization to combine resources, skills, and cash to reduce the financial strain on any one organization.
Okay, now I will present to you about the innovative financial solution that has propelled many of WCT Holdings BERHAD large-scale real estate projects such as Paradigma Mall, Pavilion Kuala Lumpur, and Razak Exchange. Okay, the solution for the project financing is known as a syndicate loan. Okay, a syndicate loan is a financing arrangement where multiple lenders collaborate to extend credit to a large borrower. This borrower could be a government agency, a private company, or an individual initiative. Each syndicate member lender contributes a portion of the loan amount and shares the same lending risk. This pooling of resources enables multiple banks or financial institutions to provide the necessary funds for substantial projects. Okay, the lead bank, they also known as the arranger. They plays a pivotal role in this process. The lead bank structure the loan arrange the loan terms, and conduct necessary due diligence. Furthermore, the lead banks invites other lenders to participate. By sharing the risks and benefits, multiple banks can support large-scale projects effectively. Next is the interest rate. Interest rate is a crucial component of any payment plan, as it determines the cost of borrowing. Okay, next is about the interest rate. Interest rate is a crucial component of any payment plans, as it determines the cost of borrowing. It is represented as a percentage of the total amount borrowed. Syndicate loans typically offer competitive interest rates based on local or international benchmark, such as the London Interbank Offered Rate, or known as LIBOR. These rates are structured to align with the cash flow and development pace of the project, and may include a margin that reflects the project's risk profile and prevailing market condition. Okay, for the repayment schedule, the repayment schedule outlines the frequency and timing of repayments. It specifies the number of payment, their due dates, and the total amount out for each. During the construction phase, borrowers usually pays interest only on the amount disbursed. Once the project is completed and starts generating revenue, the borrower begins repaying both principal and interest. Repayment are typically made in installments over a longer period or as a lump sum. The long term can range from 5 to 20 years, depending on the project's financial viability and projected cash flow. Okay, for the collateral requirements, collateral is served as a security for the debt. WCT Holdings can offer the project itself, including any buildings, land, and underlying receivable. This is as the primary collateral for the loan. Okay, depending on the risk assessment, additional collateral may be required, such as corporate guarantee, other real estate holdings, or a debt service reserve account.
Good day, doctor. My name is Tae Soo Chin, matrix number 285577. Today, I will present about benefits of syndicated loans and comparison to other banks or products. First and foremost, I will present about advantages of syndicated loans. WCT Holdings is able to access large amounts of funding through syndicated loans that may not be available through a single lender. By spreading the risk across multiple lenders, a single bank's risk exposure is reduced. Syndicated loans are designed to meet the unique requirements of large projects and offer more flexible terms and structures. By working with a number of reputable banks, WTC Holdings' credibility is strengthened and strong relationships are established. Furthermore, when compared to conventional single-lender loans, syndicated loans provide flexibility with regard to terms, interest rate, and repayment schedule. The changing nature of building deadlines and market situation can be accommodated by this flexibility. Moreover, borrowers may benefit from more competitive terms, such as lower interest rates and advantageous repayment plans, brought about competition among syndicate members. And the next one, I will present about comparison to other banks or products. Compared to syndicated loans, bilateral loans involve only one lender, which may subject the lender to greater risk and limit the loan amount. This may result in higher interest rates and stricter terms. Another option for raising funds is to issue bonds, but doing so generally requires a good credit score and higher bond underwriting and marketing fees. In addition, bonds do not offer the same degree of flexibility in drawdown and repayment schedules. Equity financing reduces the ownership position of existing shareholders and may be less attractive if the business wants to maintain control of the project, even if it eliminates debt and interest payments. That's all from me. I will pass to the next presenter. Thank you.
Assalamualaikum and hi everyone. My name is NURUL BINTI DAHLAN and my matric number is 287519. So I will going to present about the risk that can face by the bank in supporting this project. The first one is financial risk, which is include credit risk, interest rate risk, liquidity risk, and cost overrun risk. Credit risk is the risk that WCT Holdings Berhad might default on its loan repayment if the company faces financial difficulty or project delays. It might struggle to generate the expected revenue. This could result in missed loan repayment and leading to financial loss for the bank. Next is interest rate risk. Interest rate risk can be fluctuated due to economic conditions, central banks' policies, and market sentiment. If the interest rate rise, the cost of borrowing for the project could increase, affecting the bank's return on investment. Conversely, if the rates fall, the project financing cost might decrease, but this could also reduce the bank's profit margin. Moreover, liquidity risk is a risk that arises when there are delays in project completion or in the sale of developed properties. This delay can impact cash flow, making it difficult for WCT Holdings Berhad to meet the obligation. Last but not least is cost overrun risk. Construction project often face unexpected expenses due to unforeseen circumstances like supply chains disruption, labor shortage, or price increases for raw materials. This cost overrun can significantly increase the overall project cost, requiring additional funding. This additional burden can strain the bank's resources and the borrower's ability to repay. Second big risk is operational risk due to construction delay and project management. Delay in construction can occur due to various factors such as adverse weather, labor strike, or issue with subcontractor. This delay can push back the project completion date, leading to the increased cost and postponed revenue generated. Effective project management is critical to ensure that the projects stay on schedule within the budget. The third big risk is market risk. It's happened due to real estate market condition and demand. The value of the properties developed as part of the TRX project can fluctuate based on market condition. Factors such as economic cycle, change in interest rate, and local demand for real estate can impact property values. If the demand is lower than expected, it can lead to lower rental income and sale revenue. Economic risk is due to economic downturns and inflation. Broader economic conditions such as recession or economic slowdowns can reduce demand for commercial and retail space. This can impact the project financial rising cost of materials and labor due to inflation. Also can increase the overall project cost, affecting profitability. Lastly, technological risk. Rapid changes in technology can make certain aspects of the TRX development outdated or less attractive to potential buyer. That's all. Thank you.